Good morning. Today I have with me Ted Tsiakopoulos, who's the Senior Economist, Special Housing Markets Policy and Research with Canada Mortgage and Housing. Good morning, Ted.
Good morning, Brian. How are you?
Great, thank you. Today I just want to walk you through 4 questions, really talking about the housing market since we're in COVID-19 environment. First question today is, since no one foresaw a pandemic of this magnitude, should we be worried about a major housing market decline?
So, this is the million-dollar question. The housing market was gaining momentum from mid-2019 onwards, and we started to see the stress test really fading. Its impacts were fading beyond June 2019. We also saw a very, very strong job market. The job market, we were creating on an annualized basis at one point 6% rate of growth in employment. And that's quite strong. In-migration was very strong. Interest rates were not moving up. They were stabilizing, and of course started to creep lower as we entered 2020. Just to put the numbers in perspective, Brian, sales early this year were approaching numbers that we were seeing back in the heated days of 2017. We were in a higher end seller's market. Once the pandemic, I think, passes and the stimulus works its way through the system, we should see a pretty sharp recovery. But as you know, this is one of a few scenarios that we're looking at and other forecasters are looking at. Our market insights team is currently updating its forecast, but the timing of this recovery is quite uncertain. In the short run, I think what we can say with certainty is that, much like other industries, real estate will not be immune to the COVID-19 pandemic. We shouldn't expect a strong second quarter of activity.
So start looking towards the third quarter. Is that what you're telling us?
Pretty much. I think yeah.
Right. So as an everyday consumer, we educate as a real estate broker, we educate our clients a lot about the housing market. What do you recommend? What housing market indicators or what indicators in the market should a consumer be looking at to get a sense of how the market is healthy or what they should look at?
Well, prior to joining CMHC, I worked in financial markets on the wealth management side. And, financial markets are very forward-looking. They tell us a lot. I've tried to implement a lot of those indicators into my day-to-day work. So if we continue to see the stock market and the bond market, more specifically, stock prices, bond yields, continuing to test the lows that we've seen recently deep into the third quarter, I would be concerned about that. That suggests to me that uncertainty continues to remain high, and this uncertainty could persist and impact buyer psychology. I would also keep my eyes on full-time employment. As you know, if you have a job, you're likely in the housing market looking for a home. Your capacity to buy a home is greater. Should full-time employment weakness persist into the third quarter, I think this could prolong the weakness in housing demand further. Just this morning, the U.S. reported over 6 million Americans filing for unemployment insurance benefits. That's a high number, right? Typically, those numbers are in and around 300,000. Canadian numbers, similar story there. We saw just shy of 1 million Canadians filing for unemployment. So we really need to see the job market turn around. That is very critical for housing. The other last point I'd like to make, a lot of people look at year-over-year data. That's good. I think you need to complement that with quarter-over-quarter data. Look at that, because that gives you a better sense of where the trend in sales and prices is headed. Okay, it's a better indicator of what momentum in the market is likely to look at in the months ahead.
Ted, since Giraffe Realty is a database company, we actually pulled sales for the March 30th and March 31st. I was actually surprised to see that the sales to list ratio were both above what the actual listing price was. Is that surprising to you?
Not so much. I mean, I think we did see a much stronger first half market in March. I think as we move through the latter part of March, activity did start to taper off somewhat. The good news is that while buyers may have put their decisions to buy on hold, vendors have kept their homes off the market as well. So that helps keep a floor on house prices. So that sales to new listings ratio doesn't collapse as much as you would expect, because listings have dried up as well. So that's good.
Yep.
I would put less, as I mentioned, I would put less weight on what the March data will look like once it's out. Less weight on April, May, possibly, obviously, June. If I was looking at any data, I would keep my eye on what September looks like, what August and September looks like. That's going to give us a better sense of where this market is going and how quickly it's recovering. So keep your eye on those numbers.
That's a
Yeah.
great tip. Don't panic in the short term. Look a little bit further to the midterm is what you're recommending.
Well, that's it. I think we all know what the second quarter numbers will look like. That won't be much of a surprise, but I would certainly keep my eye on the August and particularly the September data. I'd also say, Brian, keep your eyes on what's going on around your communities. So if you start to see people going out to coffee shops, going out shopping, on patios, that's a sign that people are out and about. They're feeling a bit more certain, and that's a sign that perhaps things are moving back a little more to normalcy, and so that's also a good sign.
Wouldn't be a good interview if I didn't ask you a hard question. CMHC had a very good positive outlook for the housing market in 2020, especially in Ontario. When are you going to be revising your forecast?
So as I mentioned, I mean, our market insights group is looking at that. We are looking at obviously different scenarios, and we will be reporting on those numbers very soon. There are a lot of moving parts here to assess. As I said, I think if we can flatten the curve on COVID-19, I think if the stimulus works its way through the system the way we think, um, then we'll have a quicker recovery. If that doesn't happen, we are looking at the recovery taking a little longer to play out. But make no mistake about it, Brian. People put their decisions to buy a TV, if that's what they were looking at, renovate their homes, buy a home, on hold. I don't think they've permanently said, "Hey, that's it. I'm not buying this product or service." I think there's pent-up demand that's building. It's just the challenge right now is timing, and that's something that we're looking at.
Ted, thank you very much for your insights today. It was super helpful.
Thank you, Brian, and hope to talk to you soon.
We will. Thanks again. Bye-bye.